All right, welcome everybody to the Retire Young podcast, and this is the podcast we talk about the financial markets, how they work, and then different ways you can upgrade your lifestyle. And we're doing something a little bit different. We're working a little virtual lately, and I have a special guest on here with me today, Brandon Wendell, CMT. Brandon Wendell.
That's correct. Chartered
How's
market
everything
technician.
today? How's everything going, Brandon?
It's going good. I'm quarantine casual today. That's the dress code, right?
You're right. You're right. What does CMT mean anyway?
Chartered market technician. Basically, there's, I think, about 2,500 in the world, and it's very similar to a master's degree in technical analysis. So I had to learn pretty much all the indicators, more so what they measure and how they measure things, all the different theories about how the markets work, Elliott wave, Dow theory, things like that. So really pretty much anything you throw at me technical analysis wise, I've had to study that and interpret and be able to use it in a practical application.
Cool. And you've been doing this, sounds like, for many years. How did you get started prior to becoming the CMT and, the technician that you are now?
Well, I got involved in the markets as a broker. It was just something I needed a job, to be honest with you. It's in the late 90s, so it was kind of the booming industry back then. And my father was a broker as well at one point, so I figured, I'd give it a try. And I loved the markets, but I didn't love the sales part of it. So I ended up moving back into what they call back office operations and became a trader for the brokerage. What I was doing there was simply order routing. The orders would come in from the brokers. I would deal with what they call market makers and get the orders executed online for the exchange and for the customers. Eventually, I was offered an opportunity to work at a hedge fund. And that's where I got involved with Online Trading Academy, learning how to trade the right way.
The right, cool. Now, with current market conditions right now, we're seeing a lot of, uncertainty, we'll call it, volatility, which actually spells opportunity right now.
Oh, absolutely. Yeah.
What do you just give your perspective on what's happening with the markets? We've seen a big drop. We've seen a little rally this week, last week a little bit as well. But what do you think is really happening, and what are your thoughts on current market conditions?
Well, we're extremely volatile. Actually, one of the things I could probably do is just show you something right here, if that's okay.
Yeah, sure. Go ahead.
Okay, great. So I'll just show you my chart. And what I'm going to do here is I'm going to take this out to the S&P 500 index itself. And we're going to look at a much bigger picture here. So I'm going to go out to, I can even do monthly. When you take a look at the way the markets are reacting right now, we had this huge drop in price. And before I talk about that, let me delete that. It was predictable. It really was. The markets, if you know what you're looking for in the technical analysis standpoint, they are predictable. So I went down to a weekly chart here. And what I'm seeing is as prices are moving up to new highs, we were actually seeing a lack of momentum. And it's kind of like if you're driving your car, you're moving along at 60 miles an hour and you let your foot off the pedal. You're not going to keep moving forever. It's eventually the vehicle is going to slow down. So that's what happened here is we lost all of our momentum. And then on the first drop, we actually got a reversal signal for the markets telling us we were going to go into bearish territory. So what we are currently experiencing is simply a bear market correction, or a bull trap, if you will, where we've dropped off the highs all the way down for quite a bit. And we have actually only retraced, I believe, let me see here, about 50% of what we had lost. So I'll put that in. And actually not even quite 50% on the S&P. Now, if you take this back to the 2008 and also the 2000 drops, they also experienced a 50% drop before they continued to move down to the real bottoms. So I can even show you that just at least on one of these. 2000, sorry, wrong spot. There we go. 2008, you can see the big move down right here and then the retracement of about 50%. So everybody thought at that point, oh, we've seen the bottom, we're fine. And there it is, 50% retracement before we ended up continuing to go down. So I kind of see us in a very similar picture here.
Sure. Yeah. So you're with your analysis. It's not a crystal ball, but it's all about probabilities as well, right?
That's all it is. Nobody knows the certain future of the markets whatsoever. Nobody can. But we put the probabilities on our side, and that's really all we're trying to do is find the highest probable direction the markets are likely to take.
Now, what if somebody wanted to get started trading and investing? You teach thousands of people how to get started trading and investing. Like, what if somebody wanted to get started but just didn't know where to start? What do you think they should do first?
Well, definitely find a place that you feel very comfortable with where they have people who have been there, done that. So You got to make sure that people actually trade, not just are teaching. I mean, they're two separate skills, to be honest with you. It's very rare to find people that can do both at times. I was very fortunate back in 1999. I found Online Trading Academy and ended up getting my start there. Believe it or not, the hedge fund sent me there to get my training to trade their $50 million for the fund.
Nice.
So yeah, it was pretty nice that they did that for me, because eventually I basically developed a skill that I'm now allowed to take with me anywhere I go in the world. Yeah. And I can trade from anywhere, anytime, as long as I have internet access.
That's the key. Because nowadays, people are working virtually this last week or so, or last month.
This is probably one of the best times to get involved with it, honestly, because you got the time, you're at home.
Yeah. Well, that's the thing. We got a good month here of really working from home or nothing. If you're not learning a skill at this time, it's on you, right?
Absolutely.
Yep. Now is the best time to do that. Now, tell me about this. You do you've taught a lot of different programs, but you have a special program that you're teaching. It's called the Signature Series, right?
Right.
What is it? Can you tell me what exactly that is?
Yeah, in the Signature Series, I do a little bit more advanced work with the technical analysis in the markets, based on certain characteristics. One thing that I do, and again, if you don't mind, I'll show you my chart.
Sure.
Get that set up for you there. You'll notice I was talking about this indicator at the bottom. The indicator I'm using is the RSI, or Relative Strength Index. However, the manner that I use it is completely different than the way most people would look at this. Most people would say, oh, we're oversold, we're going to bounce. To me, this is a momentum indicator telling me it's going to continue. But there are certain signals that you can get on almost any time frame, from the weekly all the way down to the 5 minutes, to let you know where prices are likely to change direction. So for case in point, this morning we started rallying up, and you can see we turned around right at an area of selling pressure, which we would have identified. And of course, I got to fix that again. But one of the things, like I said, I teach is how to interpret the markets a little more accurately, and using some additional tools to do that. So looking at the weakness that started to come in the markets as we're running into that area, it verified that we were going to pull back, not completely turned down yet. And then we got the final signal right about here. There's a signal on this chart. And unless you know what you're looking for, you're not going to notice it. But there, it failed to go back into bullish territory. So that told us it was time to sell off and don't try to buy on any of these pullbacks. And sure enough, we continue to move down. We're going to continue moving down before the end of the day, most likely. So that's one of the things I focus on there. Another thing I focus on quite heavily is something called futures spread trading. Okay. And this will help out a lot of people right now, because what you'll notice in almost every market, the markets are extremely volatile, right? And one of the main things that has happened, if you take a look, I'll just go here to the CME website on futures. Let's see, we'll go to the S&P.
So just for the new person, what do you mean by spread trading? What does that really mean for someone that doesn't know what that is?
Perfect. Okay. Sorry, I got ahead of myself there. What we are doing here is called directional trading.
Okay.
And what directional trading means is you are simply picking a direction you believe the markets are going to go, and either selling or buying in order to profit from prices moving in that direction. Spread trading, I don't need to write it all out. I'll just talk about it. Yeah. It's basically it's going to take too long. I'm so used to teaching. Basically, what will happen in this case is you can look at two related securities, or even the same security. Take, for instance, the S&P futures, ESM 2020. There we go. And I can compare this. It's usually done on a larger time frame, not smaller. So I'll go out to a daily chart. But what I can do is I can compare this to a related contract. In the case of the S&P, I'll do ESU 2020. Now, what you'll notice when I have this on here is that it's looking almost the exact same, but what happens is there's two different contracts. I believe I put it on there. Should have. I'm having a little bit of issue there, but that's okay. Anyway, what happens with these two contracts, there it is. You can finally see it peeking out. That's what I need to do. And I need to pin it to scale A and change the color so I can actually see it. But what happens is these two contracts are different months and therefore may not move the exact same. Mm-hmm. And what happens is, as a spread trader, let me just do it actually with the NASDAQ, it'll be a little bit more pronounced. So right here, NQM 2020, and there we go. This will be much better. NQU 2020. So what I'm looking at now is going to be the June contract versus the September contract. It didn't take though, so let me try that again.
Technology, really right?
There it goes. Yeah, there it goes. Okay, so what happens now is with these two related securities, and I'll go down to 4-hour chart to see if we can see a dramatic move there. Not so much. But anyway, what you'll notice is that when these two are moving, they don't move exactly the same. Oh, I know what I missed here. That's what I missed. Percent change. So see how they're separating at times?
Yeah.
That's the spread. Basically, the price of one security. These are both NASDAQ contracts. The first one in the blue is the NASDAQ from June, and the second one in purple there is the NASDAQ from September. However, you get more volume and more activity on the what they call the front month, the June contract versus the September contract. So if they're not moving together, you can see that when they separate, they usually come back together. And if you can trade that, that's basically what you're doing in the spread trade. You're buying one and selling the other at the same time.
Little
So take, for instance, yeah, exactly. Take, for instance, where I just moved that line. Nope, didn't mean to do that. There we go. So see how they're separated. If I bought the purple and shorted the blue, they came together. So I would have lost money shorting the blue, but I would have made more money buying the purple. And when they come together, you make a profit. So the advantage is huge because, if I go to the contract specifications right now on futures, people are having a tough time trading these because the margin requirements are huge. Take, for instance, that NASDAQ we looked at.
Yep.
Now, a lot of people are moving to the micros because they just can't afford the normal size futures overnight.
Yeah.
And even intraday, there's still some issues too. But again, if I go to the NASDAQ, I'll just show you right here, the margin requirement for the NASDAQ, the maintenance is $12,000. The margin requirement is a little bit higher than that. So you have to have $15,000 in your account for one contract for the NASDAQ. Yeah. But what I just showed you, you can actually trade a directional trade using that same spread and trading the NASDAQ. Let me get to it. I don't know why I didn't keep it there. There it goes. And now take a look at the margin requirement there, $250.
Yeah.
I took a $15,000 or $12,000 trading position, and now I only have to come up with $250 for a very similar position. It's not identical, but it's very similar. So you can trade spreads, and I was charting it a little bit differently than I normally would, but it gives you that opportunity to trade futures without having to come up with tens of thousands of dollars in this kind of market, which many people just don't have.
Well, it's just using your capital wisely, right?
Absolutely. And by the way, the rate of return is much bigger too.
Yeah. Well, even if you have, many thousands or millions of dollars, is it wise to utilize the whole thing? I mean, that's probably why a lot of people shy away from stock, right?
Right. I mean, here we get the power of leverage, but we're also getting a little bit of safety with it as well. Remember, you're both long and short of the same same underlying security, which means if they both move in one direction, you don't win or lose anything. Mm-hmm. You're playing the change in the relationship between the two. So it's a much safer play, and it's very suitable, honestly, for retirement accounts. It's great for those.
Sure. Yeah. Low risk, high reward, high probability, right?
Absolutely. That's what we're always looking for.
And that's what it's all about. I mean, it's just all about having more odds in your favor. I mean, you're a big guy with supply and demand. I mean, that's your main focus. But when you can put different odds in there, increase those odds, hopefully that return helps your returns as well. I mean, it's all about increasing those odds.
Absolutely. That's all it is. I mean, that's the only thing we can ever control in the markets is how much we're going to lose if we're wrong. That's it.
Yep, exactly. So you want to know exactly what that is so you can have proper risk management then.
Absolutely.
So cool. That's really good. I mean, so you're going to be doing a lot of those signature series classes coming up. I know a lot of people are trying to get into those. I mean, so spread trading, is that the main focus in there? Did you do anything else?
No, there's a lot of other things. I have a couple strategies I've been working on for the past 15 years. One specifically is called the 889 strategy, and it's a methodology. I don't want to get too in depth into Elliott Wave because that's a very subjective method of reading the markets. However, I found a way of simplifying the process. And by using two moving averages in a strict manner, it's all controlled with risk and looking for the right opportunities. I've been able to capture what is called the leg 3 with the Elliott Wave move, which is typically the largest move in a market. So I use this on stocks. I can use it on futures. I can use it on currencies, and it can be used on any time frame, both intraday and long term. So I teach that strategy in the signature series as well, with plenty of examples and opportunities to see it in action.
Got it. It's nice because you've developed these strategies over years of trading and investing. So it's really nice to be able to talk to someone that's done a lot of that stuff. And we look forward to seeing you in one of those classes coming up here. Thank you. Yeah, I'm working on hopefully launching it online as well. That'd be great to be able to do it, especially in these conditions. Yeah, I mean, we might be here for a while. Who knows? So I appreciate you coming on the Retire Young podcast. We will see you soon. And it's always great to have your insight on the show. Thanks for having me, Josh. I appreciate it. Thanks a lot.